Hello everyone. If my surroundings look a bit strange, it's because we're in Stellenbosch in the Western Cape in South Africa and house sitting, or dog sitting is more accurate, for a friend. So we drove down and we're staying here for a couple of weeks. So the next few videos will be either in this room, which is our bedroom, or somewhere else like maybe a restaurant or something. I've put up some slides of Stellenbosch for those who are interested who don't know where it is. I want to talk about the markets quickly. It is the Sunday before the Christmas week. So I'm not even sure if anyone's going to be watching this or anyone's going to be trading. Next week's market will be very thin. There won't be a lot of action, a lot of activity going on. But nevertheless, we're still in the market with a few trades, and we'll have a look at those now. Let's start as usual with the currencies. And the dollar index actually reversed on Friday, quite surprisingly to many people. We've broken above that swing high. We've also broken above this 50% retracement level. I'll zoom out so you can see that. And it's also that previous swing high. This is a key and crucial number, and we've broken above that and above the last recent swing high. However, I continue to think that we're trading within a range, and the top of the range obviously isn't here at 107, but maybe it's at 109 or 110, something like that. And the bottom of the range is probably around about 100, which is the parity number for the dollar index. So we're still within this broad range, and let's see what happens. Friday's price action was interesting. We had a dark cloud cover candle. Now, it's not that significant because the previous day, Thursday's candle was quite small, but we did make a new high and completely engulfed that candle and broke down through the top Bollinger Band. So potentially this is actually going to go short and reverse here. Last time we did something similar was over here, and we dropped back a little bit, not a lot, a little bit. So maybe we can get a retracement back to the 50-period moving average and maybe the 105 level, which is the 38% Fibonacci retracement number. So let's have a look at the currencies that we're in. We're in the euro and the pound long, and we're short on the dollar yen. These positions haven't changed for a couple of weeks now. Let's have a look at the euro and see how the price action corresponds with what we saw in the dollar index. And we did indeed form a reversal. Thursday's candle was an inverse hammer, and Friday's candle was a big bullish candle, reversing quite a lot of that dark bearish candle on Wednesday and potentially forming a double bottom here at about the 1.03 level. So if this keeps on moving up next week, and perhaps it will, quite often in the week around Christmas, the week after, and maybe the week before, the market sort of sets a direction. Next week's a good opportunity for that, sets a direction, and will just sort of melt along those lines, not dramatically, not with great volume, but steadily and slowly. So maybe that's what we've got coming up in the next week for the euro. Similar sort of thing on the pound, but this was a piercing reversal candle pattern, forming a new low, making a spike down below that previous low, setting up for a Wyckoff spring perhaps, and also forming a piercing pattern, a new low, and then the candle, the body of this candle, closed more than halfway up the previous day's candle. Not quite a double bottom because we made a new low compared to that previous swing low, but if it carries on moving up, we'll call that a double bottom in any case. Looking at the dollar yen, we also moved down from that trend line at the top there. This is the 4-hour chart. Let's have a look at the day chart on here and see how that looks. Again, a slightly higher high and then a bearish candle. It's not an engulfing candle and it's not a dark cloud cover. So that's not truly a reversal pattern. But we did reverse off that trend line, connecting the lows there and there and there, and connecting that little high there and reversing off that level. Slightly above this order block, but also at the 78.6% Fibonacci retracement number. That's that level there. You can't really see it. It's in yellow. If we do turn around here and move down convincingly over the next few days, we should see this carry on moving down quite fast. The 78.6% Fibonacci retracement level, if we turn there, and it doesn't always happen, of course, but if we do turn here and this reversal or change in direction sticks, then we should see quite a convincing move. That's the nature of the 78.6% Fibonacci level. Please excuse me if my voice is a bit harsh. I've been driving all day with the aircon on. It seems to have dried my throat out. Now, going across to stocks, what's going on? We've actually had a great run on this because I'm going to focus on the NASDAQ right now. We actually sold at the top here, as you know, in that blob. I posted this well in advance on X about a week before this happened. And I said we'd probably try and reverse here. Top Bollinger Band, the inner channel bottom. This is the inner channel, the red one that I'm talking about, and moving down then to the bottom of the green channel. What we did on Friday was to buy at the bottom of the channel and the 50-period moving average. We moved up really sharply and dramatically, but didn't quite hold there. So this is a hesitation candle. Do notice one thing though. If I show you this and zoom in, we have sort of an expanding pattern here. We've got a higher high and a higher low on this candle compared to the previous candle. So kind of a broadening pattern really, but not very neat and not very sort of controlled, but out of control, but wild. So what are we going to do on stocks? Well, once again, there are conflicting views on which way we're going. We remain long on the NASDAQ and the S&P. We took the same trade on the S&P, short at the top, out at the bottom, reversing to long, and the S&P moved up dramatically. above the 50-period moving average, but closed down beneath it thereafter. Also a broadening pattern forming here. So a broadening pattern is a reversal pattern. We were moving down. We formed the broadening pattern. As I said, it's messy and it's not clean, but we did get long. So we longed both the NASDAQ and the S&P from quite near the bottom. I don't know how this is going to work out today. Like I said, probably we're not going to see a massive sell-off during this next week or two over the Christmas period. And more likely than not, we'll carry on melting in the direction that we've sort of established. That direction right now is actually long on the NASDAQ and long on the S&P. Yes, I know these markets are incredibly overbought. I know that the stocks are overvalued. I know that there's been a lot of dark pool selling. I know that we had massive options expiry on Friday, which will upset this balance. You can see this in the price action. A huge spike up and a huge spike down. A lot of whipsaw. And I did read actually in this last drop on both the NASDAQ and the S&P, that was on Wednesday, that about 300,000 traders, retail traders, blew their accounts. I don't know where those numbers quite came from. It was on X and there was a citation which I didn't go into. But huge losses because of not only this big move down on both the NASDAQ and the S&P, I think 4.5% and 3.5%, something like that. But then followed up on Friday by this options expiry and massive whipsaw. So we were quite fortunate. I'm not claiming to be a hero on this one, but we did manage to sell the top and buy the bottom on both the NASDAQ and the S&P. I suppose I'll put that down to luck more than skill. So you can put that in any quote from me. I'm not claiming any sort of tremendous insight into these markets. Sometimes things just go your way. We were also short the German 30, which we've now hedged. We hedged it at the 50-period moving average. So we've locked in the profit from the top to where we are currently. We're also short on Tesla, but we hedged 60% of that. So we're sort of 35% long. Same on Nvidia and a couple of other trades that we got going. We're also hedged on Apple. Apple actually held up surprisingly well, despite the really bad iPhone 16 and the really bad Apple Intelligence. And I've got both of those and I'm not really particularly impressed, even though I'm an Apple fanboy. So Apple's doing pretty well. There might be reasons for that, which I haven't read yet. Now going across to crypto and gold, we got long on gold following the dramatic dip down, the piercing pattern, another attempt at the bottom, and then a whole bunch of reversal candles here, including a one up, one down candle pattern there, which we also saw on silver. I opted to take the gold trade rather than silver, just because these times are pretty uncertain. And not only, well, we've got the inauguration coming up in January, but there have been UFO drones flying all over New Jersey. We've got all sorts of shenanigans going on with Russia. We had a drone striking a Russian high-rise building, a Ukraine drone, perhaps a US or EU weapon system, and perhaps even controlled by operators, technicians from some of those areas. So I think an escalation in that war is not good. We may even spike up over the weekend on gold. So we're long and strong on that. Bitcoin, we're holding our long positions. We added to the dip on Bitcoin, dipping down to, quite scarily, moving down below this order block, but only reaching that previous swing low where it touched this trend line. This is a 4-hour chart on Bitcoin on Coinbase. Let me have a look at the day chart and show you what that looks like. There's that spike down, only to the 50-day moving average. Bitcoin is trading more and more technically and more in line with normal technical analysis, which you'd expect on most other instruments that you trade. And Bitcoin is becoming much more tradable in that sense. So we dipped down to the 50-period moving average. We did break that trend line. We made a big spike low. Consolidation candle on Saturday. It didn't carry on moving down. Quite neatly contained there, just below the trend line and the 20-period moving average. Those are warnings. And then today, Sunday, also holding up quite well. So we remain long on Bitcoin, and my target remains exactly as it has been for some time now. First of all, 108, which we've now reached, and then about 140. Maybe it's 120, maybe it's 140, maybe it's 160 or 180, maybe it's much more. I have no clue, I don't know. I do expect that Bitcoin will try and reach up a little bit higher and then pull back and begin a bit of a bear phase. I don't know how long that'll last. I don't expect Bitcoin will be doing these huge sort of 80% retracements any further. And I think we could expect maybe 50%, maybe 38%. Something more along the lines of traditional stocks or something like that. So we're still long on Bitcoin. We have a small long position on Ethereum too. We're long on Palladium, long on Platinum. These are looking weak. I've spoken about these quite often. And until these turn around, we're just going to be biding our time, hoping that they don't break down further through support. Not adding to these positions, not hedging them just yet. Let's have a quick look at Palladium. So breaking down through that smiley face bottom, breaking down through that recent support, but only to this support here, and a couple of the other support levels. There's a market structure break exactly where we are, and maybe that line will carry on providing support across here. That's palladium. We're still long on palladium. These aren't huge positions, and I'm not willing to add until we actually see some movement higher. This is platinum. Remember, I drew this descending triangle in here. Still in play. We haven't broken through the top of the triangle yet, so it's still weak, still bearish. We're below all the moving averages, including the 20 period, the short-term moving average. And also, sort of just languishing down here. We had a smiley face. I've even removed the smiley face because we're now going sideways, and it's no longer a smile. It's more of a grimace, and that's not very good news. However, we are into this order block. We've got this descending triangle to act as a trigger for a rally. We know when we break and close above that line, we should see platinum begin to rally too. I do think that all of these metals have some strength in them going into next year, but it's just a matter of timing the bid on this quite carefully. Right, let's go across to natural gas and uranium and oil. We're still long on URA and UEC, also languishing, much like the metals, and actually uranium is a metal. So all of the metals are languishing, including uranium, even though it's an energy metal. Going across to natural gas, you know my story here. We got hedged there. We were never able to exit that hedge. My rollover was on Friday, so we've now exited the trade altogether. Just to remind you of our recent trades, which have been pretty good on natural gas, we went long at this green arrow, short at the red, long at the green arrow, short at the red. This is the only one that we missed out on. We went long, we broke down through support, I immediately hedged. I waited for a pullback to get back into the long trade to unhedge. We never got that pullback. As you can see, after that big bull candle, we got no retracement whatsoever, and we just carried on moving up from there. Let's look at the Henry Hub. This is the day chart of the front month of the Henry Hub futures on the NYMEX. Notice first of all the rollover date. I'll click on here. Friday, the 27th of December. That's this coming Friday. It's Sunday now, so 5 days from hence. My broker's rolled over. If it didn't do it on Friday, it'll do it on Monday morning. And so we missed out on this last little bit of this run up. I don't know what's going to happen after the rollover, and it's Sunday today. We're going to have a weekend gap up or down, or maybe no gap. Normally there's a little gap one way or the other. We could have quite a big gap down actually on this occasion. Let's go to barchart.com and have a look at the futures curve. Got it up here already. And first of all, we're actually above the average price for this time of the year for this contract. So if anything, we're a little bit overpriced now. We know that anything above $3.50, $3.50 or so is getting expensive. We're currently trading at $3.75, so actually super expensive for this time of the year. Let's have a look at what's going on with the commitment of traders. Once again, please excuse my voice. I'm sure you can hear me, though. As long as you can hear me, that's the most important thing. Commercials adding more, 583 long, 458 short, adding quite a lot more to the short side, so perhaps expecting this market to carry on going up. Producers 202 long, 226 short, quite balanced, and also the subtractions on both sides, both the same, more or less. Managed money, these are mainly hedge funds, institutions, that sort of thing. 172 long, 238 short, weighted to the short side, maybe expecting it to go long. Generally, the managed money tends to hedge more than the other reportables, the retail traders, so keep in mind that they may be hedging some of these or exiting trades. So 172 long, 238 short, slightly weighted to the short side, as are the producers, and adding more to the short side, so also perhaps expecting this market to carry on moving up. The non-commercials, we're into the hedges now, 220 long, 348 short, so adding a little bit more to the short side, so heavily weighted short, and potentially, possibly, expecting the market to go long as well, like the commercials and the producers. The swap dealers, the real hedges, 192 long, and only 44 short, so weighted to the long side, maybe expecting this market to go short. Again, a little bit of a mixed bag. I'd go with the swap dealers really for the main direction here, and I'd ignore the commercials and the producers. They tend to be less sophisticated than the swap dealers. These are the guys who know what they're talking about. So weighted long, expecting perhaps the market to go short. Retail traders are the reportables, 43 long, quite a lot, 110 short. So these are not an inconsequential part of the market. It's quite a lot compared to, for example, commercials 582 and 458 short. And we got 1/4 of that are actual retail traders, so quite a lot. But notice 110 to the short side, only 48 long, weighted to the short side, and quite often the retail traders, these other reportables, are wrong. And I would expect that the swap dealers are probably more accurate. So this market seems to me to be positioned to go to the long side. The commercials, the producers, the swap dealers, and even the managed money expect this market to perhaps go in that direction. Pretty interesting. Let's look at the futures stack or the forward curve. Current contract 374. We'll be rolling over next week into 342. So we will definitely gap down on the rollover. That might be a good place to buy natural gas after the rollover next week. If your broker has rolled over early, you might have an opportunity tonight or on Monday, 342 long. It may be well worth considering buying at that price, considering what we've seen up here in the weighting of the commercials, the producers, and the swap dealers looking like they're expecting this market to go up. This might be a great chance to buy natural gas at around about $3.40 on the open of the market later on today or early tomorrow. Perhaps a little bit further down, maybe 3.3, 3.35. We'll go back to the chart and have a look at where the supports are around the 3.4 level now. Moving into March, 293, April, 292, and then back above $3 in May and June. But not looking particularly strong and sort of gradually drifting down on the forward curve here on the futures. Right, so we talked about rolling into the February contract at $3.40. Let's see what support we can find around about $3.40. This is the NYMEX chart. And I'm going to draw a line at 340, which is where we'll probably roll over to or thereabouts. Let's draw that in there. And is there any support there? Well, nothing obvious there, bit of a congestion zone, perhaps something like that. It's well above the 20-period moving average. That will move up, actually, so it could be near the 20-period moving average. Let's have a look at the 4-hour chart. Here's the line at about $3.40. Let's make it more accurate and zoom this out a little bit to see what's going on down here. Couple of swing highs around that level. This is a bit higher, about 355, so we'll be below that. And then there's some more support down here, moving averages down into 335, maybe 330, something like that. We've got these levels here. We've got the 200 moving up. So a whole conglomeration of moving averages and support. And I dare say that if we draw a trend line in here as well, something like this, we're going to have to cut off that spike low. That's the one that got us hedged, which we are not able to exit. So that I regard as a false break. So we could get back down to that trend line. That makes a lot of sense. So maybe a rollover at this price, 340, maybe faffing around there for a bit. Bit of a dip down to this trend line, depending on how long it takes. That could take us down to 335. And allow for some untoward spikes below this trend line again, perhaps down to, I don't know, 330, 325. But I think 340 to about 330 is an excellent area to consider buying. Considering the positioning of the swap dealers and the commercials and producers and all that sort of thing, and even the managed money, it looks like there's a lean or a bent towards the bullish side. So that's natural gas, and we'll wait to get back into that. We won't probably have missed out on anything, actually, because we'll probably be able to get back in at the price that we got hedged at down here originally, or somewhere around there, and resume this trade as if we weren't locked out by that hedge. Going across to WTI Oil, we're still short. Not much really to add. We've been shorting on all of these pops. We continue to do so. My target is, upon a breakdown, particularly of this flat bottom, we should see a sudden surge down. We've got some trend lines and channel lines down below us. Let's have a look. I'll go to the weekly chart. It makes it easier. And here's the weekly chart. I expect us to carry on down this zigzag down to around about $58, something like that. Maybe it's slightly lower, 55, 56, 57, and eventually a breakdown through a little bit lower. And I think we could actually even get back down to the 30s and 40s, maybe sort of high 40s, something like that. That's where we stand at the moment. And the moment we break down through this flat bottom, I'll be adding to my short position. On a collapse through there, sudden spike up, a breakout, pullback, and then a resumption of the trend. Probably best easier seen on the day chart. There's the flat bottom I'm talking about. I'm going to ignore that spike down there for the moment. But on a breakdown and a close down beneath there, I'll be looking to add to my short position. We have quite a healthy short position on from quite high up. So I'm happy with WTI oil. Now, going across to some of the commodities, we remain long on sugar, short on cocoa. Bit of a turnaround on Friday with a, well, let's call that a bearish engulfing candle. These things happen from time to time, even in this uptrend. So I'm not calling this uptrend over by any means. We're 50% hedged on this, so we've only got half a position. And the hedged position, the long side of the hedge, will take off when I'm convinced this is turned around, perhaps with a weekly reversal candle. And then I'll take off the long side of the hedge for profit and use that money to add to the short side and hopefully enjoy the ride down. Same with coffee. We're also short on coffee unhedged from that level there. It's a smaller position. I'm waiting to add some more. I'm not ready to do that just yet. I'd like to see a convincing close back inside this channel. The dogs that we're dog sitting are barking outside. Please ignore them. It's going to be an interesting visit, this, with two chihuahuas, coughing chihuahuas. Right, and then, so that's the way we are on coffee. As soon as we get a breakdown and a close and a resumption of these downward trends, or resumption is not quite the right word, and initiation of these downward trends, we'll start to add to these positions. We're also long on corn, continues to do well. There's our entry position around about 396. We're at 432 now, so really quite a good 10% profit on there so far. We're also long on cotton. That's languishing down at the bottom of the range. This green line on cotton is where I hope we'll hold. This double bottom will be a triple or quadruple bottom by that time. We did try and bounce off there on Friday. So maybe a tweezer bottom looks okay. I like tweezer bottoms very much, and especially when they're small, they're manageable. We may consider adding another pretty small position on cotton right here next week. And because this tweezer candle reversal pattern is quite small in size, we can put a stop or a hedge very close beneath that new position, long on cotton. We're also short on orange juice, and we're long on wheat. Wheat has been frustrating. People keep on saying, should we add? Should we add? No, I'm not convinced so far. We've got a long position from there. We're in profit on that one, and one from there. We're in a loss on that one. Roughly balanced, even slightly in the negative actually right now. But until we see something positive or interesting, I'm not going to be adding or changing my positions. Of course, if we break down beneath the swing low at 495, call it 500, we may have to hedge. But on the same token, we've got a relatively small position on this. We can add some more, definitely, on a break and a close above this trend line. It's making a very, very neat, beautiful trend line that we can trade against. Breakout, pullback. Let me remind you what that looks like. I'll use my drawing tool here. So breakout, pullback, and off you go. This is meant to be in green, and it's a mess, and the angle's all wrong. Just ignore it. I'm trying to do it with my mouse pad in this house that we're sitting at. So that's the sort of thing I'll be looking for wheat before I start adding, or if we break down below this low, I'll have to consider hedging it. And then soybeans, well, we just added a new position on soya on Friday, having broken down. We actually hedged it here, interestingly. We've got a long position from there. That's going all the way back to August. We've got another one from October. We then hedged those positions on that breakdown. We then bounced up, formed a piercing reversal candle pattern, and carried on moving up. We immediately unhedged our positions. In other words, took the short side off, and we added more to the long side. So we have a slightly bigger position now, and we've performed a reversal. Looks like a fake break. Looks pretty good to me. Once again, there's the pattern, trend line breakdown. We didn't retest it properly, just dribbling down in towards Christmas. Fake break last week, bounced back up rapidly with a piercing candle pattern, and Friday closed with a strong bullish candle. So we're now back long in direction on this, unhedged, and we have a slightly bigger position on soya. Going across to TLT and VIX, well, of course, we exited our VIX position at around about 20, as we always do, regardless of how high it goes thereafter. 20 is a good number to exit, seeing as we got in down at about 14 and a half. We took a good profit on that. We're waiting to look to buy this again sometime next year. These markets will definitely need to have a correction. Maybe it'll be January, maybe February, maybe July, I don't know. When we get a significant correction, we should see the VIX spike up. And on this occasion, we may get a proper decent spike like that last time. A lot of people calling for recession, market collapse, chaos, war, World War III, markets melting down all over the show. I don't know if that's going to happen. It could happen. I don't know. I'm not banking on it, though. And I'm certainly not going to be holding VIX indefinitely, trying to get above 20, above 30, above 40. When 20 is a good profit, it's a good place to turn around. We'll have another chance to buy it. And these markets, as I said, going back to the S&P and the NASDAQ, well, we're long. We've just been so lucky and so fortunate on this, getting short at the top, long at the bottom, taking profit, getting long at the bottom. Same on S&P, same on German 30. So fantastic trading week last week. And actually, we did pretty much the same on Tesla. And we took some good trades on NVIDIA too. So until these markets begin to collapse, there's no evidence of it yet. This is a hesitation candle. There's a lot of thrashing about. This big drop on Wednesday was kind of scary, but the market bounced back so dramatically up to the top. Options expiration caused created some of this movement on Friday. Huge triple, maybe it was quadruple witching options expiration, but certainly not looking particularly bearish. Some people will read this pattern as full-on bear. Some people will read it as a full-on bull reversal, and this market's going to the moon. Two distinct camps on this. I'm not in either of the camps. I'm going to trade the charts, trade these markets as I see them moving on the charts. And so far, with quite a lot of luck, we've been correct on this. So that's it for today, folks. I'm in Stellenbosch in the Western Cape in South Africa. Perhaps one of the videos next week will be from somewhere else, maybe near the beach or whatever. But if you do enjoy this sort of content, I'd love your subscription and your thumbs up. It really helps the channel grow. I need your help. I really need you to participate in this community and help us grow. And please look at some of the links below. There's some interesting stuff that we have on offer. So I look forward to speaking to you in the next video. Take care. Have a great Sunday evening and good luck for next week. If you are on holiday, enjoy it. Come back fresh, revived, and ready to beat these markets again. Take care. Charts in my grip, win is my best friend. Hit the bid, stack it to the sky. Buy low, sell high, watch some numbers fly. Grinding in the pit, never asking why. Future so bright, I need a third eye.
Market open, I'm like a lion unleashed. Strike on the trade, feasting on the feast. Click, clack, keyboard tap, fingers like a beast. Numbers do the tango, profits up, can't cease. Futures market got me doing the groove. Hustling in the pit,